Welcome, dear traders. Cryptocurrencies have remained at the levels where they were last seen trading in 2023. Bitcoin continues to lag behind both the stock market and the gold after the collapse of the FTX exchange. However, some market participants still believe that Bitcoin can catch up. So far, the US dollar has had a rather poor start of the year. Markets are looking for hints in the latest FOMC meeting minutes and are waiting for macroeconomic data to predict inflation. However, the overall sentiment is leaning toward the Fed easing its hawkish monetary policy. 2023 is the year when both the United States and the European Union economies are predicted to enter recession. This will weigh on the US dollar, with the first signs of such pressure being visible during the previous week. Over the past 7 days, the US dollar index was hovering between 103.40 and 104.80. The index hit its weekly low late on a Friday, December 30, and rose to its weekly high on January 3, when exchanges were reopening after the winter holidays. Currently, traders are largely bearish on the US dollar. There are plenty of different forecasts for Bitcoin at the moment. However, most of them predict that the next few months will be quite disappointing for the cryptocurrency. Bitcoin is likely to either hit new lows or enter another sideways channel. Even if the bear market ends in 2023, it will take quite some time for cryptocurrencies to move upwards. Bitcoin was created after the global financial crisis of 2007 and 2008, which resulted in a massive government intervention into the economy. It was intended to be a decentralized global currency that would allow holders to personally manage their assets. On January 3, Bitcoin had its 14th anniversary. On that day, in 2009, Satoshi Nakamoto launched the mainnet. On January 9, Bitcoin version 0.1 was released, and on January 12, the first Bitcoin transaction was carried out. Time will tell if this week will give support to the cryptocurrency. If we look at the weekly chart, we will see that $16,000 is still the key level for Bitcoin. Over the past 7 days, Bitcoin added 0.7% against the US dollar, reaching a high of 16,929 on January 4, and the cryptocurrency hit its low of $16,625 on Friday, when the US dollar reached its peak. The second largest cryptocurrency by market cap gained 3.3% over the past week. Ethereum traded between $1,207 and $1,254 and experienced its lowest volatility in 6 years. Data suggests that Ethereum staking is still attracting many crypto traders in spite of the prolonged crypto winter. Ethereum enthusiasts keep claiming that staking is a viable profit-making method. However, only 20% of stakers are still in the money after Ethereum's early drop. Generally, staked coins are locked in a period of about 2 years, so it's not a concern at this point. Earlier, the developers of Ethereum announced the Shanghai update, which is expected to be launched on March. It will allow all validators to withdraw some of the staked money and get a reward. Analysts say that the end of the bearish trend does not mean that crypto will instantly start a bull cycle. The crypto market needs an inflow of funds from the stock and currency markets to show strong green figures. Currently, crypto is suffering from chaos, scammers, and other factors, and thus investors are fleeing from crypto assets. It may take the industry approximately a couple of years to win back the trust of institutional investors and hedge funds. The FTX cryptocurrency exchange collapsed and went bankrupt 2 months ago. However, the shockwave continues to shatter the crypto market. As a result, many crypto platforms have to prove the solvency and transparency of their funds. For example, Binance, the world's largest cryptocurrency exchange, publishes BTC and Ethereum proof of reserves to provide more transparency on the customer funds. It seems that the collapse of FTX imparted a good lesson for the industry, and Binance tries to regain investor trust. Binance has released a statement on the official website. We launched a proof of research. We launched the proof of reserves system to enable anyone to verify that user funds custodied on a Binance are held one-to-one plus extra reserves. Since we are talking about reserves, assets, and the solvency, let's speak about gold today. The US dollar may soon lose its safe haven status in the face of a recession in the United States. This means that investors may prefer gold to the American currency. On Wednesday, the precious metal climbed above $1,850 per 3 ounce, trading at the June highs at the end of the trading day after the FOMC meeting minutes had been released. Today, we will not dive into the gold market. Instead, crypto tips will tell you about the PAXG gold stablecoin. The tokenized gold is backed by real gold reserves held in custody by the PAXG Trust Company. PAXG undergoes monthly audits by a third-party firm that verifies that PAXG's gold reserve matches the supply of PAXG tokens. PAXG tokens have serial numbers that correspond to those of individual gold bars. Each token equals 1/3 ounce of a 400 ounce gold bar and is pledged to their real-time market value. PAXG allows users to own fractions of physical gold bars without the burden of fees, storage, or transportation costs. At the same time, the asset is tradable on the centralized exchanges. The stablecoin's chart shows that its price has been growing steadily for a week and reached above $1,850. As you can see, investors still add physical assets to their portfolios despite an abundance of crypto assets. Perhaps a balance of traditional assets and crypto is a key to success. And this has been our weekly recap of the crypto market. The InstaForex team and me, Kate Stichina, are glad to keep you updated on the world of digital assets. Thanks for watching. Leave your comments down below and see you in our next review. Take care and see you.